Hey, Koukun here, coming at you with another video about real estate investing. So we're outside an RBC branch here in St. Catharines, and I just want to make a quick video about the 6-month mortgage deferral that has come into effect since the start of this whole COVID-19 situation. I just want to talk about some of the pros and cons regarding the mortgage deferral, and then share with you what I'm doing actually currently with my own investment portfolio. Some of the pros, obviously it's clear, not having to pay your mortgage for the next 6 months, whether you own your own home or you own a rental property, can be a huge advantage, right, to reduce your expenses during that time. If you have tenants who are able to pay their rent, you could still defer your mortgage so that you can build up a savings account just in case some unexpected thing happens within the next 6 months. We don't know what's going to happen with this whole situation, so it's always wise to have more savings, right? On the other side, if your tenants are going through a financial difficulty and they can't pay their rent, by you deferring your mortgage, you could pass on some of the savings to them and maybe defer some of their rent for the next couple of months and create a payment plan of some kind with them so that they're able to survive these next couple of months until they're back to work. So it's a way you can help them out. Now, there are some aspects to this that may not be as advantageous. The one thing to remember is that a deferral does not mean that you're waiving the payments. So you are going to pay for those missed payments. The principal balance still remains, and the interest that you would have paid over the next 6 months, what happens is at the end of the 6 months, that entire interest amount gets added up and gets added to your principal balance on the mortgage. For example, say the interest you would have paid over the next 6 months is, call it $3,000, and your mortgage balance before the 6 months started was $200,000. At the end of it, it would be $203,000, and for the rest of your mortgage amortization, you will be then paying off a $203,000 mortgage amount. So your payments do go up for the life of your mortgage for the next 25, 30 years in many cases. So it's a way of deferring the payments, but then you are indeed paying it, and in fact you're paying interest on the interest that you have deferred. So you are definitely paying for that over the life of your mortgage. Some of the other potential side effects of this are, with the amount of deferrals happening, there is the potential for many mistakes to happen during this time. So the bank may accidentally report to your credit bureau that you haven't made your payment, and it could hurt your credit. Now, the banks are saying currently that they're not going to do that, but when you have hundreds of thousands, even millions of people deferring their mortgages right now, there's potential for many mistakes to happen. The next side effect is this. Say you have a mortgage with Scotiabank and you're deferring the mortgage payments, but you are a real estate investor and you want to purchase more properties, especially if some of the opportunities get even better, right? If people are selling their properties in a rush and they're willing to let them go at lower prices, it may create the opportunity for you to buy under market value properties. But for example, if you've deferred a Scotiabank mortgage, there is the chance that Scotiabank's not going to give you a mortgage. So if you're planning on getting a mortgage with a lender, it may not be the best idea to defer the mortgage with that lender. That's just some of the side effects of this mortgage deferral. Now, for me, I own quite a few properties with joint venture partners who are not planning on making any purchases in the next couple of years. So all those mortgages, we've actually deferred them as much as they're allowing us right now. And for the properties that I own personally in my own name, I've not deferred them yet because right now I'm in the process of a refinance. So I'm not going to defer those mortgages. But yeah, if you're in a position where you know you're not going to buy a property for the next, say, call it year, 2 years, but you do have rentals that you have with any of the major lenders right now, you'd be able to benefit from this mortgage deferral. So let me know your questions in the comments below. Let me know your thoughts on this mortgage deferral. Are you going to do it? Are you not? If so, why? I'd be happy to help out if you have any questions. All the best.